this time we'll move on to the panel discussion. And the panel will include Carel, who I've introduced earlier, as well as Ain Bazane, who is the Senior Fintech Analyst in the Executive Management Department of the South African Reserve Bank, or the SARB. There's also Marius Reitz, who is the General Manager for Africa at Luno. This is a global cryptocurrency application which is headquartered in London. There's also Wiehann Olivier, and Wiehann is a partner. Okay. Wiehann is partner and digital assets lead at Mazars, South Africa, which is an international audit, tax, and advisory firm. And we will now turn our attention to this panel discussion. Thank you very much. Am I audible? So let's begin our discussion. And with this one, I will direct it to Marius, to Wiehann, and also to Ain. So you can pay attention to this. So the FSCA, which is the regulator, recently declared crypto assets as a financial product. What is your opinion on this decision? Do you think it was the right decision? Will it encourage institutional adoption of the technology? And also, how does it change the influence, or how does it influence your operations, essentially?
Okay, I'll go first. Sure. Thank you. I think the first point there is that I think all new technologies encounters regulation at some stage on road to mass adoption. If we look at Uber and we look at Airbnb, you can probably say that regulation was the catalyst for them gaining mass market adoption. With regards to the FSCA announcement, I think it's a positive. Firstly, the regulation declared, I feel, is proportionate to the risks sought to be addressed, which is important. You can't have a case of regulation at all costs. That, in the end, stifles innovation. I think, secondly, it provides clarity to cryptocurrency asset service providers or CASPs or intermediaries, and that's typically a crypto exchange. Crypto exchanges play a very important role in the crypto industry. They provide stability to the market. They act as the first layer of defense in terms of keeping scammers out. They provide liquidity to the market, so they ensure stable pricing, so that when you purchase your crypto on Luno with your rand, that the price is more or less in line with global markets, and that's important. I think cryptocurrency asset platforms also provide a lot of economic growth, or has the potential to drive economic growth locally. At Luno specifically, we have just over 700 employees locally in South Africa. And if you consider the impact on the fiscus from that in terms of employee taxes, the households that they support, and the money spent into the economy, if you look at more clarity that's going through regulation in terms of the marketing budgets that can be spent in the local economy. And I think lastly, consumer protection, which is actually chief, it's the most important part. I think the key point there is that we're seeing a clear demand for crypto. There's no denying that. Over the last couple of years, we've seen grassroots level growth for cryptocurrency, whether that's people wanting to invest in it or wanting to speculate or use it for payments for different reasons. And so I think it's very important that we see regulation that specifically focus on what we call the on-ramps or the crypto exchanges, because that is where that consumer protection risk is provided. So I think overall it's important. At Luno, we are licensed in many other markets, so I think we are well set to obtain the license when the license regime opens next year, June.
Thank you very much for that perspective. Please go ahead, Ain, and share yours.
Thank you very much. So from my perspective, the FSCA's move and the phase declaration aligns very well with the position paper that we issued in 2021 on crypto assets. And that paper really unearthed and highlighted the three primary risks that sit within the sector. And as Marius has pointed out, the primary one was, or one of the really key ones, was around consumer protection. The next one is about money laundering and terrorist financing. And lastly, it was about illicit cross-border flows, as Carel so beautifully elocuted to us earlier today. So it is a welcome move. We've always communicated consistently that this is going to be a phased approach. So it's phase one. And what this will allow us to do across these three regulatory entities and the interventions, we're going to be able to source more data. And it's going to be reliable, it's going to be consistent. And the hope is that from that data, we can then continue building on to the regulations. So prudential regulation, financial stability considerations, payment system regulation, we need data to justify actions in that space. So it is phased, and I appreciate the fact that you share the sentiment that it's proportionate. And I think it is a step in the right direction, but there's many more steps in this journey as this ecosystem evolves and flourishes, hopefully.
Thank you for that. Wiehann, do you have any thoughts on the matter?
Yeah, I think for the most part, I'll probably sing the same tune in terms of cryptocurrency is definitely, or the regulation of cryptocurrency is definitely a step in the right direction. I believe ultimately it will encourage more users of cryptocurrency and digital assets into legacy businesses and traditional financial services industry as well. From my point of view, the dire need for regulations in South Africa, of course, as we mentioned today, is to protect the stakeholders. It's those using cryptocurrencies and those investing in cryptocurrencies as a whole. Of course, there's a lot more that needs to change in terms of the legislation. It's not just as easy as saying cryptocurrency is a financial product and moving on. There's other glooming areas that we'll probably discuss as well today. But I mean, from my perspective as an external auditor, I can clearly see the need and already can give you an example of how these regulations will have a benefit for all of those virtual asset service providers and the stakeholders in this industry. So if you look at something like what we saw with Mirror Trading International happening in 2020, which was the biggest crypto scam in the world and probably the biggest Ponzi scheme that we've seen in South Africa as well, if you look at how everything transpired from a sense that, sure, it was a company that was incorporated in South Africa, but they didn't adhere to the regulations. But the issue is there was no monitoring of those same regulations as well. So with the introduction of classifying cryptocurrency as a financial product and being required to register as the financial service providers, there's a lot more monitoring. So a company, for example, needs to produce audited financial statements if it holds a certain level of assets in a fiduciary capacity within 6 months of financial year end. But when we look at what happened with Mirror Trading International, there was no monitoring it. The company's registrar wasn't having a look and saying, well, or is this company actually adhering to the relevant laws and regulations? But from a financial services provider and also the monitoring of the FSCA essentially requires these FSPs to submit audited financial statements between 3 to 4 months. So there is a form of monitoring going on as well that goes a long way. So these small steps that we're taking in the right direction is essentially building to, of course, mass adoption, but also weeding out some of the bad apples. From our point of view as an auditor as well, the fact that we are operating in a regulated industry now also eliminates a certain element of due diligence. So you can think when we want to take on a client or we want to look at those charged with governance of the specific company, we'd actually need to go and perform extensive due diligences to make sure that it's someone that we want to be associated with and we can mitigate our risk as well. But now with the regulations kicking in, at least that takes out the first line of defense, saying that if these guys are able to make it through the way of registering as the FSP, then surely it does mitigate a certain element of the risk. But it's really interesting to see how all of this plays out in the long term in terms of what it will mean for our business as well. Of course, we're always clapping hands with more regulations because more regulations mean more business for us, but it's a step in the right direction. We as external auditors and statutory auditors are usually appointed by the shareholders. It's not the directors. We need to look at to protect the interest of stakeholders and the general public as a whole. And I believe this regulation of cryptocurrency and this first step is definitely a move in the right direction.
Thank you for that comprehensive response. Carel, in a sense, blockchain technology enables a parallel financial system in South Africa. Is it a way to opt out of South African rand?
Short or long answer? No, let's first think about it from this point of view. If you use it for payments, then it's a I mean, that's a massive use case, and it's most definitely an improvement. You can send money across borders, you can send money outside of banking hours 24/7, basically for free. Transaction is confirmed almost immediately. So definitely a game changer. And if you use it natively as a payment system, then it's one thing, but you can also abstract it completely from the user. We're seeing now Pick and Pay. I don't know if you guys saw yesterday, since yesterday Pick and Pay is now accepting Bitcoin. So it's not like Pick and Pay is now becoming an investor in Bitcoin. I can guarantee you they're going to sell that Bitcoin immediately if they want rands. But just the fact that there's now a rail, it's called a rail, it's a financial term, a rail in which you can use Bitcoin to move South African rands is quite amazing. And there's a big reason for why they would do that. Now, the whole notion of opting out of your national currency, that's probably another use case. And you know, and one reason why people would want to do that is because monetary policy is usually decided by a small group of people, usually like 5 people that meets every other month. And although I have a lot of trust in our committee through the South African Reserve Bank, that they will preserve the value of my currency, we have seen many other Reserve Bank committees gone rogue, like they completely lose their mind. And one of them is our neighboring country, Zimbabwe. Today you had maybe some wealth in your Zim dollars, tomorrow it's gone. And that's because a person that you trusted to preserve the value of your currency has lost his mind. Now, when that happens, then for sure, I would highly recommend anyone buying anything to get out of the South African rand. Just reduce the rands as much as possible. And one of those assets is most surely Bitcoin. Another can be gold or something like real estate. So I do think it has a place to opt out of the rand, but only when things go really bad. I don't think it's applicable today.
Thank you, Carel. Before we move on, Ayn, would you like to respond or shall we proceed? Marius, now that the FSCA has declared cryptocurrencies as financial products, there are many rumors of commercial banks offering their clients exposure to this asset class. We've also seen exchanges build payment rails and acting as banks. How do you see this playing out? Will banks become exchanges? Will crypto asset service providers become banks?
That's a very good question. I think time will tell. But in a nutshell, I think at Luno, we think that cryptocurrency will in the end of the day, address some of the same or provide the same financial services that you can currently get through a bank. And it will address the same financial problems that people experience. But we think that it will just happen in a better way. So we think in the short run, we'll probably see cryptocurrency companies compete against each other. In the long run, I do believe that banks and any other company that will be vying for people's personal finance attention will probably compete against cryptocurrency platforms. And I think for a couple of reasons. I think firstly, people's behavior with money won't change. There will always be a need for people to save. There will always be a need for people to store money, to borrow, and to invest. So those 4 needs will always exist. I think secondly, the regulatory forces, and we've seen that now with the FSCA announcement, the trust, the need for trust will always be there. We will always want to trust someone to assist us in our financial matters. And I think thirdly, the competitive forces, banks wanting to compete, banks wanting to prevent new entrants from taking their business. I think those factors will in the end of the day shape the market and shape the future of the market. So while I do think that cryptocurrency is taking financial services to a more decentralized space, I do think that there will be centralized, more or less decentralized players such as banks in the future that will probably offer that cryptocurrency-related services to the public. I just have to mention that we are seeing different adoption curves, the rate of acceptance across different use cases, whether that's the use of cryptocurrency as an investment or as a payment to obtain finance against and many other different use cases, but also across different jurisdictions and markets. So, as an example, in the United States, we have seen institutional adoption. We have listed companies on the Nasdaq that hold crypto on their balance sheets. You have financial advisors for the past 2 years that's able to advise their clients on crypto investments. We've not seen any institutions in South Africa even do a pilot or do a proof of concept in the market. So I don't think we should compare South Africa to some of the other regions where we have seen institutional adoption. I do think it will take time. And another driver of that will be increased adoption. So, for example, people won't use cryptocurrency for payments in their daily lives if the other person is not wanting or willing to accept crypto as a means of payment. We will only reach that stage once we have a critical mass of people that own cryptocurrency. So if you own cryptocurrency as an investment, for example, and you're wanting to pay someone else for service rendered, that person also has a crypto wallet. They will be more likely to accept crypto as a means of payment than someone that needs to go and open up a Luno wallet. So I do think that the consumer demand for crypto and for the different use cases will also guide banks, financial institutions, payment service providers in terms of the rate of innovation and adoption. Yeah, thanks.
Thank you very much for that. Wiehann, are there any specific auditing or accounting practices that institutions with crypto exposure should take note of? Things that would be unique to them.
Yeah, sure. So it's an interesting question, and usually when we start to talk about things such as accounting, people tend to doze off because it's not their most interesting topic. But something very interesting has been happening in the background, and we have been looking at and debating probably over the last 2 years, and it's the whole concept about on and off balance sheet accounting. And it's quite interesting when you start to look at it. So to give an example, so in South Africa, we're able to apply international financial reporting standards that essentially are sets of rules and disclosure requirements of how you need to compile your financial statements. In the US, for example, we use US GAAP, but IFRS and US GAAP to a certain extent has the ability to argue something that we refer to as off-balance sheet accounting. Now, essentially, if I go to the likes of Luno and I deposit 100 Rand into Luno, what I'm expecting to see on their balance sheet and what Luno actually does is they've got 100 Rands worth of asset on the balance sheet and they've got 100 Rands worth of liability or funds owed to the customer. Now, as soon as you get into the realm of trying to argue that it's off balance sheet, you might run into a bit of trouble, and I'll explain that maybe just in a second. But so as we were debating this on and off balance sheet, we at Mazars always been of the opinion that on balance sheet needs to be the answer because there's an element of accountability that goes with it, as well as making sure that the assets actually exist. Strangely enough, at the start of last year, the European Financial Reporting Authority Group actually came out with a position paper and tackled a bunch of cryptocurrency topics. And one of the topics that they actually covered was this whole thing about on and off balance sheet accounting. And they say some of the key criteria that you need to look at is how the exchange is actually going about custodying their funds. Are they actually custodying or commingling customer funds in single public key addresses or keeping customer and corporate funds in single public key addresses? If that is the case, then there's a clear indication for on-balance sheet accounting because you assess it from a control point of view. But still there were certain entities in certain jurisdictions under certain accounting frameworks that still argued differently. Earlier this year, we had quite a watershed moment as well, where the SEC came out and said, well, if you're a cryptocurrency exchange or a virtual asset service provider holding digital assets on behalf of customers, you actually need to disclose it on balance sheet at fair value. So it actually moves away from leaving it as open for interpretation and saying, well, this is the way that it needs to go. And the benefit of this is I can clearly explain to you from an auditor's point of view. So if you have a situation, let's say, for example, you've got a large exchange with 100 million Rands worth of funds, customer funds sitting on your balance sheet, and you've got a corresponding liability. If those funds are held off balance sheet, meaning it's not sitting on the balance sheet, no auditor is coming in, no third party is coming in, making sure that those assets actually exist and that the virtual asset service provider has custody over that asset. They control those assets. But when, of course, it's on balance sheet, the auditor comes in, we check, make sure that it's correctly valued, that it exists on chain or within a custody solution, and that they actually have ownership over those funds as well. Because we've seen how this has gone south. We saw it with the likes of Mirror Trading International. We saw it with Quadriga in Canada, and we've seen how this can go terribly south. So users and those in the virtual asset services sector and investing in cryptocurrency need to look at those virtual asset service providers and ask them the question. And of course, financial statements is not freely available in South Africa, but to ask the question, are they actually accounting for these items on the balance sheet? And is it the third party coming and making sure that those assets actually exist and that your funds are secured and that the liability on your balance sheet is also complete of those funds owed to the customer as well? Because if they're not doing it, where are they gaining, or where are they giving you the assurance that whatever they're holding your asset? Where's your assurance coming from, besides from the fact that they say, well, don't worry about it, everything is in order? Are they actually issuing something that we refer to as a proof of reserve report? We've been issuing this now for the likes of Luno and for other virtual asset service providers in South Africa, where we come in as a third party. We make sure that all the assets that the exchange actually own, that they exist on chain within a custody solution, so they exist, whether the exchange itself has ownership over those assets, and of course that it's collateralized, meaning looking at the liability side as well. Is that liability complete, and does the assets fairly valued exceed the liabilities? For if something would have happened to the exchange, that you know you'd be able to get your funds. So that's what we've been seeing from an audit and from an accounting and assurance point of view over the last couple of years when it comes to digital assets and cryptocurrency and accounting thereof. Another element at play as well that we don't speak about a hell of a lot. So now cryptocurrencies are deemed to be a financial product and is regulated. Now, what we expect to see is more auditors get involved into the digital asset space as well. This is a very niche type of industry in terms of you need to understand the technology and you need to understand this risk. And from my perspective, I'm always concerned with other auditors coming into the space and saying, well, we're able to give assurance over a balance sitting on the balance sheet, but they don't necessarily have the ability or the techniques or the know-how to take on that client. And that does pose a different element of risk at the end of the day. It's something I've raised with my regulator in the past, and they are aware of it, but to limit that, it's going to be very, very difficult.
Thank you for that. Ain, the South African Reserve Bank has been one of the more visible regulators when it comes to crypto. Is there any reason for this? Does the SARB see this technology as a threat or an opportunity?
So Bitcoin has been on the South African Reserve Bank's radar since about 2011. It was one of the first tasks that I was given, is go and explain this to the executive. And through that period, we've consistently remained engaged with the conversation. So Bitcoin comes out and it fundamentally asks a principle-based question that says, what is money? Right? Because what it says is, you don't need a central bank to issue this. As long as people agree that they're going to accept this as value, they're going to go along and they're going to transact. It then questions the value chain that we've spent years creating and these third parties that we've put on this value chain to introduce trust, right? And it says, no, we don't need that. We have our protocol. It's fine. The conversation then moves along and it becomes about the underlying technology. And everybody starts going, no, guys, Bitcoin is great, but it doesn't pose any financial stability risks. It's not really a threat to the payment system at this point, but have you paid attention to the underlying technology, right? And thereafter, we are going through this little bit of an existential crisis that says, okay, so if this takes off, then what do we look like in 50 years? And in the midst of that existential crisis, what the Reserve Bank opted to do, instead of just be afraid and shut things down, is we experimented. We went face first into experimentation mode. So we started with Project Koka, which in my mind is very much a self-disruption exercise, where we said, can this technology replace the bedrock of the financial system, which is SAMOS, the settlement system? Can it replace it? Can it do what SAMOS does? We built. The short answer is yes, but there's a couple of tweaks and rules that still need to be built into that. We then went a step further with Project Koka 2, where we then said DLT in terms of trade, clearing, and settlement. What does that look like? What does this future world look like? Again, self-disruption. A few years later, not so long ago, Facebook comes out and says, oh no, we're going to launch DM. And the regulatory community around the world, especially central banks, go, oh man, can you all stop, right? And in response to that, again, experimentation. So South Africa, along with many other central banks in the world, are investigating central bank digital currencies, issued digital currencies, CBDCs. And it is about understanding, it's very at the infancy stage right now, but it's about understanding the feasibility and the viability of this for the South African market. And it is that kind of experimentation that we've done over the years, and we've communicated when we experiment to the general public, and I think that's why people hold this opinion that we've been paying attention. But it's that experimentation that then leads us to believe and focus more on the opportunity that lies here. Because we've been playing with the technology, we've been getting our hands dirty, we've been standing at our own version of the coal face, and we think that there's promise here. But we can't ignore the threat, because fundamentally that is the role of a central bank, right? Is about creating even level playing fields and allowing for the market to decide. If crypto is better than the traditional sector, and they can provide better services, better products, be more inclusive, be more sustainable, then they will win at the end. And it's not our job to pick the winner, but what it is our responsibility to do is to ensure that when consumers transact, when businesses are dealing in this space, that there's safety and that there are assurances that sit in the sector. And that's why we are endeavoring to create this level playing field. The threat for me, and one of the concerns, and I think that Carel mentioned it earlier, is very much that we run the risk of widening this divide, both on an economic level, on a digital access level, on a distribution level, because what I personally see happening in the crypto asset market is that they're replicating the existing financial system with all of its problems and all of its shortcomings, and we're building it and we're just shifting power. And if we continue to do that, if that is the way that this continues to go, to the question about CASPs becoming banks, right? Then the question becomes, are we not just exacerbating it? So it's about this, and I think the other perspective that central banks and regulators are bringing to the table is around the social responsibility as we innovate. And to be responsible about that and to endeavor to narrow that gap. So that is our vantage point on DLT. It's revolutionary, but the revolution needs to be inclusive. And that is what we're trying to ensure going forward.
Thank you for that response. I think it shows a great deal of foresight from the SARB. Now, we are running out of time. So I think we're going to have to move at a little bit of a faster pace towards the end. And this one as well goes to Wiehann. We've seen many countries around the world approve and list ETFs, that's exchange-traded funds, with baskets of assets that contain Bitcoin and Ethereum. Do you think the time is right for South Africa to consider similar products?
I think the time has been right for a while now. I've been waiting anxiously for us to see listed securities that hold digital assets as underlying assets. But maybe just to take a step back as well, and this maybe just paints a picture of how different regulations are intertwined with the Pension Fund Act as well. Paragraph 28 of the Pension Fund Act specifically saying that they're not allowed, pension funds are not allowed to invest into cryptocurrencies, because of two reasons. It's volatility and the fact that it's unregulated. But now we operate in a regulated space, so are they going to revisit that and say, well, sure, you can invest, but at least put a cap on it? So it'll be interesting to see that from that perspective. We've been assisting clients in the background looking at the possibility of listing these types of securities on listed exchanges such as the JSE, but the JSE unfortunately said no because it's still an unregulated product. From that perspective, we actually wrote to the JSE and asking them with the regulations coming in, are you going to allow it now? We haven't received a response yet, but I can understand that they need to weigh the magnitude of the decision as well. But I'd very much like to see us move into the direction where we've got these more formal structures of investing into cryptocurrencies. But once again, there's another law that needs to be changed, and that's the Collective Investment Schemes Act. Because from a tax point of view, and maybe just to illustrate this quickly, if you hold a bundle of cryptocurrency and you decide to reweight the bundle on a monthly or weekly basis, that reweighting triggers a tax event. So there's a barter transaction, asset to asset. So in the fund itself, it actually triggers a tax event. So the fund itself, the company is taxed on that gain, which isn't to the benefit of the stakeholders or the shareholder this instance. So if you're able to classify or you're able to apply the exemption of a collective investment scheme to that fund, then that would mean that everything happening in the fund doesn't necessarily trigger a tax event. It's only at the top level where shareholders buy and sell the digital assets, or let's call it the share and the security, that triggers that tax event. But now I went actually and had a look at the Collective Investment Schemes Act, and I noted that they refer to it as security. But still, unfortunately, they need to amend that definition of a security to include digital assets. So it's also time will tell how they will treat this. But it comes back to the original comment I made. This first step that we took in terms of bringing the regulations about is only the first of multiple steps that need to be taken. But it's always the case of as fast as possible, but as slow as needed. And that's the way we want to see regulations roll out in South Africa from my point of view.
Thank you for that response. Carel, what tools are available to cryptocurrency institutions to monitor for anti-money laundering and terrorist financing? Do you think this is a problem in South Africa?
Yeah, it's definitely a huge problem. Like I mentioned earlier during the talk as well, there are many loopholes using crypto assets today to conduct activities in money laundering and terrorist financing, etc., etc. And currently, there's no real enforcement to stop that. Although the tools are available, as I've shown you earlier, the blockchains are completely transparent and auditable, and anyone that has the capability of building the software can actually monitor them. And I think that enforcement and compliance can actually be much improved from conventional finance. I think enforcement can be 100% done. And even though this is permissionless system, that's the amazing thing about it. Compliance can be assured to 100% as well. Everything can be automated. You don't need humans. You don't need humans at the back to tell you whether a transaction was involved in money laundering, terrorist financing, whether it was tax evasion or anything like that. And we've seen that in other parts of the world already, where criminals dare, like a US citizen, for instance, dare not use cryptocurrency for anything illegal, because that person will be subject to law enforcement within record time, actually much faster than if you use the US dollar, which is strange, right? Ironic. So yeah, I think that the tools are available, and I just think it needs to be used. It's not used.
Thank you for that. And the next one is to Marius. Following the recent announcements by the regulator, what additional regulatory guidance would you like to see for DLT adoption to accelerate in South Africa?
Thank you. Ayn, I'm talking to you. So I think we need to, the crypto industry is huge. It's a massive multi-trillion-dollar industry with many different use cases. At Luno, we think that the finance use case can have the biggest impact in future. So what we've seen in other markets, for example, Nigeria and Kenya, is we've seen central banks impose blanket bans on consumers and on financial institutions from offering supporting services, for example, bank accounts to cryptocurrency platforms. In countries like that, you typically see less collaboration between the private sector and the central bank. There's no touch point with the private sector to share new typologies, new use cases, to share progress in terms of demand, adoption, the volumes of crypto that flows through the local economies. So I think the first point is that don't impose blanket bans, even on some of the future use cases. What happens is that, especially in emerging markets, where people face more economic hardship, typically, people tend to get more creative in how they try and drive value for themselves personally. And that's why we've seen grassroots level growth across African markets, from Nigeria to Ghana to Kenya, because people tend to become creative in how they generate value for themselves. And that's also where a big risk sits, obviously, because a lot of people fall prey to scams, etc. That's the first point. I think the second point is around the point I mentioned earlier, is that we need regulations that are proportionate to the risks that the industry poses to consumers. We have a very pragmatic central bank, and that has been their position, and I think we applaud them for that. We are delighted by the progress that they've made over the last couple of years to create a regulatory framework. Two specific areas. I think one, we need clarity around corporates, where the corporates can purchase crypto, to put on their balance sheet as an investment, where the corporates can provide payment-related services. At this point, there's a bit of it's a bit of a grey area, especially from the FIC's perspective. Corporates form an integral part of the economy. It's a part of modern life. Most economic activity gets performed or action through corporate structures. So I do think that they will play a very important role in future in a stable crypto industry. And then secondly, I think, and this is one that's already being addressed by by AIN and the IFWGs around the point of externalization, i.e. exchange control regulations. That's also a grey area at this point. Currently, the onus is squarely on the crypto holder or the Luno customer or the valid customer to not send their cryptocurrency to an overseas platform. There's no enforcement, there's no reporting that takes place, and that creates a lot of uncertainty for the platforms like Luno and also for consumers. So I know that there's been constructive engagement with the Reserve Bank on that, and I'm hopeful that there will be some clarity fairly soon.
Thank you very much for that. And then our last question, either Marius or Wiehann, we don't have time for both. Is there any institutional adoption of DLT in South Africa? I suppose from where one sits, it does appear to be slow. Will the FSCA decision encourage, greater exposure?
I'll try and make it quick. I'm quite fortunate in the position that we are to see clients in various industries, including the likes of digital assets, and dealing with our overseas offices with the likes of Singapore and the US as well. And slowly but surely over the last 12 months, probably in Singapore, it first started to see it where traditional businesses, legacy business, are actually incorporating cryptocurrency into their business model from a receipt point of view. Because now you've got a situation that you can actually take receipt in a couple of seconds. So to give you an example, I've got a manufacturing client that distills alcohol used in brandy, sit way outside the outskirts of Cape Town in Woolsley. But now they're asking the question is they're exporting certain of their products, or they're not able to facilitate this by the use of stable coins that is actually backed by a fiat currency. It's not issued by a central bank, but backed by a fiat currency. And the answer is yes, they can actually do that. So we've now got a situation that you can accept payment in a stable coin that's less volatile. So you're actually able to take your receipt of your money within a question of 3 to 11 minutes, as opposed to having to wait 7 days for your funds. So from a cash flow perspective, it makes complete sense. We've even seen certain clients looking at the tokenization of certain commodities such as helium gas as well, where it's a better way to raise funds, and of course they create a spot price for certain commodities as well that isn't freely traded. So from that point of view, we've slowly but surely seen that adoption on a global level, but in South Africa this is starting to churn as well. The fact that we have cryptocurrency seen as a regulated financial product as well is also a step in the right direction. It makes people more comfortable in trying to incorporate digital assets and cryptocurrencies into their day-to-day business, specifically from a payments and receipts point of view.
Thank you very much for that. And with that, I would like to thank the distinguished panel for insightful views on regulation in DLT, and we can applaud them. Before they head off, I would just like to present a few gifts. I thought the gifts had moved, but fortunately they're still in the same place. Thank you so much. Thank you. And then I just have a few announcements. Thank you to the panel. Feel free to have a seat. Perhaps I should leave this behind. Yes, so the first one is that there will be a post-conference survey that will be circulated to the attendees. And our request is that you please respond to that, because feedback will help to improve the conferences in future. Also, all presentations of speakers are available on the conference website. And at this stage, we are going to our tea break, the afternoon tea break, and refreshments are served in the foyer. And there'll be other breakaway sessions starting from 3:20 onwards today. And for those who are interested in continuing with this topic of new sources of growth, that will be explored in a breakaway session tomorrow at 10. So that's another opportunity to explore that further. Please remember to visit the exhibition hall. There are many interesting technologies on display there from the CSIR. And once again, I would like to thank our speakers and panelists, and also the contribution from the audience. It's much appreciated, and enjoy your tea.